Nike. Nike is a buy and hold forever stock. It's one of the most misunderstood stocks in the market right now. As I'm recording this in December of 2024, it's a hated stock right now because it hasn't performed the last couple of years, right? And so people have kind of kicked this stock, forgotten about it. And I'm just telling you, you're missing an incredible opportunity here. This stock is up 43,000% since IPO. 43,000%. This is the definition of a buy and hold forever company, right? First off, they sell clothing related items, right? That's never being disrupted, at least as long as humans are still here, okay? I don't think we're ever going to just stop wearing clothing. And if we are, I think I'm going to Mars, okay? I think I'm out of here. So, yeah, the moral of the story is like clothing never gets disrupted. Now, Nike's had plenty of tough times in its business model and its history, right? Look at all these time periods when the stock was down significantly. This dates all the way back to the 1980s, right there, several time periods. In the 1990s, they had several vicious cycles in regards to their stock and their business model, right? In the 2000s, they had several time periods. In the 2010s, they've now had several periods, right? And the reason this happens sometimes the consumer's in a bad spot, you go through recessions. Like if you're a company that's going to be a great company over a 50-year span, you're going to go through several recessions over that time, several high inflationary environments, certain time periods where the consumer's in a weak spot, certain times the economy is really weak, right? And also, you're going to have other hot brands sometimes that have the hotness in that little short-term time period, right? And Nike's gone through that for the last 50 years, where suddenly there'll be some brand that's like the hot brand at that particular time, and everybody's talking about it. And then a few years later, no one's wearing it, no one's talking about it anymore. And Nike just remains, and they get stronger and stronger and stronger as the years tick on. This company is just a one of one, very, very special company. If you're wondering, what makes this company so unbeatable? Like, how does it Nike just decade after decade just gets bigger and bigger and bigger? This is why. What you're looking at in front of you right there, that's an unbeatable moat. This is what Nike calls Nike demand creation expense. So think of this as Nike plowing money back into their business model so they can always remain the most relevant brand in athletics, right? And they do this by sponsoring athletes and having endorsements and sponsoring teams and leagues and all these sorts of things, right? And they spend billions and billions and billions of dollars on this every single year. Now, Nike could easily say, you know what, we're going to take that $4 billion and we're just going to keep it. We're not going to bother sponsoring anybody, but then you're going to destroy Nike's brand over time, right? And allow somebody to take that spot, right? Nike never allows somebody to take that spot. They will spend billions upon billions of dollars, and you just can't compete with that if you're any other brand. It's kind of similar to what Amazon Jeff Bezos did over the years, where he just took a lot of the profits, and most of the profits just spent it right back in the business model, right? And Nike does that year in and year out, and so that's why they're unbeatable. And to kind of give you some real life reference in this, I remember as a little kid, I remember my mom used one of her favorite shirts that I always remember because it was a very catchy shirt. It was a Nike shirt, and it was a shirt, and it said some sort of slogan like "I throw like a girl" or something like that, right? And I always remember that as a little kid, and I remember she'd even wear that shirt when we'd go up camping and stuff like that. And it's just fascinating to think about that as a little kid, and then in my garage, I don't know why my track spikes from college are randomly in the garage, but my track spikes from college are randomly in my garage, right? And guess what I wore? I had a choice to get any track spikes I wanted to get, right? Basically, we got sent down to a store when I was in college, and whatever type of track spike you wanted, it was paid for by the team, right? And what did I choose? Of course, I chose Nike. There's not even any other option, right? And then my kids, this is one of my son's running shoes. Like, what did I get him for running shoes? I got Nike, of course, right? What did I wear when I played football? I wore Nike football cleats, right? So my son, he plays quarterback. What did I get my son? Nike football cleats, right? I got my 1000X hoodie. What brand you think I'm going to get with it? Of course, I'm going to get Nike times 1000X, right? So this is how Nike remains generation after generation, decade after decade, so relevant, right? The parents wear it, then the kids wear it, then their kids wear it, then their kids wear it. And it's just they remain that brand decade after decade, generation after generation. And through tough times and other hot brands coming and going, like the other brands are the other brands. And I've just seen so many brands come and go that were seen as like, oh man, this is a competitive threat to Nike. And they always just fall off. They always fall off to the wayside. Now, check this out. What I'm showing you right now is revenue of Nike over time. And look at that. Isn't that incredible to look at Nike's revenue over time? Now, keep in mind, it wasn't all up in a straight line, although you might look at that chart and if you're just looking at it for a second, you might say it's just up in a straight line. No, they had several time periods when Nike's revenue went down. Right here, Nike's revenue went down. Right here, Nike's revenue went down. And these are supposed to be their high growth days back in the 80s and 90s. Nope. Revenue down. Revenue down. Look at this. Revenue down. Right there. Revenue down. Revenue down. Right? So Nike's had at least 5 or 6 years throughout its history where revenue's been down for the company. Right? And yet, every time after that revenue down streak, they come back stronger, bigger, and more competitive than they've ever come back, right? And they're kind of one of those companies that represents their athletes, right? Nike always wants to sponsor the best athletes in the world, whether it be Ronaldo, over the years, or Tiger Woods in his heyday, or Michael Jordan, whoever it was, the most dominant athletes that you just can't compete with, Kobe, LeBron, all those guys. And it's just Nike's that sort of company that they just come back and they fight back and they beat you again and again and again. And you just can't compete with these guys, right? Now, what's fascinating is you look at Nike's 10-year kind of track record here. And a lot of the weakness obviously has come in the last couple of years as far as the stock price goes. But this was a really bad 10-year span for Nike. The stock's up 79%, 10-year total return for Nike. That's bad. Bad for Nike. 79%, keep in mind. But look at consumer discretionary total return over the past 10 years. 57% negative. Negative. Hanes Brands, 59% negative 10-year price total return. VF Corp, another clothing company, 60% negative. Under Armour, 70% negative 10-year return. Allbirds, 98.6% negative 10-year total return, right? Allbirds was a very hot shoe brand a few years ago, and now it's looking like they might end up going bankrupt, right? So that goes to show you, like, in bad times and good times, whatever it is, like Nike always actually ends up emerging stronger and stronger and stronger, right? Throughout everything it goes through. And so that's why recently I have built Nike into a pretty dang good sized position in the public count. I bought 1,239 shares. And honestly, I'm buying every share in sight in regards to Nike. I'm going to keep buying every share in sight. This is one of those stocks you buy, you hold, you make your great dividend money, and likely a lot of great stock price gains in regards to this one over the future years, right? And it'll be a love stock again. Most of the time, Nike's a love stock in the market. Every once in a while, it's a hated stock. And that's the moment we're in right now. And then it'll become a love stock again, and everybody will look at it as, wow, Nike's up another 25% this year. Wow, Nike's up another 30% this year. And it's going to be that sort of story, right? Wow, it's so stable. That's Nike. Hey, I want to thank you so much for watching that clip. I hope you really enjoyed it. What I'm showing you in front of your face right now is 1000xstocks.com. This is such an important website and service to use if you want to research companies, if you want to understand companies on a high level, so you can hopefully get better results in the market. And we know as the years tick on, money compounds. It is so important you research companies, you compare companies, you're listening to conference calls, looking at SEC filings. All that's included into 1000xstocks.com. So to enjoy 1000xstocks.com and to apply for that service, you can go to the description area of this video, or you can go to 1000xstocks.com, whichever you prefer. I bought over $10,000 of e.l.f. here today. $138 I paid for those shares, 75 shares I bought total. Now, in that particular portfolio in my ally account, that puts me at a $55,000 position, which so far we're up about 22% on that one. So, this is still just kind of early on here. Now, this is a hard stock to buy psychologically. And I thought it was worth mentioning this because, once again, I'm trying to give you some different ways of framing these stocks and kind of thinking about them. But this is a hard stock for me to buy. I'm up 1,800% on it. 1,800%. It's very difficult for somebody like myself to buy a stock that I'm up that much on, right? But let me give you a different kind of frame of thought in regards to this. So let's say you bought Amazon, it's 2001, 2002, you bought Amazon stock and you held it over the next decade, right? You made about 3,000% on Amazon stock. Now, you could have looked at Amazon stock and you could say, I'm up 3,000% on this stock. There's no way I should buy more of the stock because I'm up so much. I've made so much money on Amazon. Doesn't make sense to buy more, right? Should not buy more of the stock. In reality, there was a poor decision. Just because you're up a lot on a stock should not dictate whether you're buying or selling the stock. That's not the way the stock market works, and not the way valuations work. Because here's what you missed out on. You should have kept buying Amazon stock, because since then, Amazon's gone up another 2,000% since 2012, right? Another 2,000% gain. So you're going to say, I'm up big, I shouldn't buy. No, you should have kept buying Amazon stock. Just because you made a lot on the stock doesn't mean you stop buying it. Same way you would view it as, like, just because the stock's gone up a lot, you wouldn't view it as, like, it's a for sure sell or something like that, right? So you should have kept buying. The way you got to look at stocks is the numbers and the valuation. That's all that matters. The numbers and the valuation. What you're up or down the stock means nothing. If Amazon was poorly executed and their business model is crap, it didn't make sense to keep buying Amazon. You should have sold out of the stock, right? But the company which just kept executing on a high level, which means you should have kept buying stock. You looked at the numbers, you looked at the valuation, you said the revenue likely over the next 5 years is going to X number. The net income over the next 5 years is likely going to X number. I need to keep adding Amazon stock, right? That's the way you got to look at this overall. So when I look at e.l.f., here are some numbers I have that I believe these are kind of realistic numbers for e.l.f. So next year, I have been growing the revenue 25% and net income about 100% next year. Net income is going to be back on track next year. Big cost year for the company. They've had a lot of costs of business model. I do not expect that to continue in terms of ramping up a cost. I think that's going to moderate substantially in 2025 and 2026, which means their net income is going to fly over this next few years, in my personal opinion, okay? So the net income margins have so much expansion here. Like, this is a company that net income margins will probably get to 20+% by the end of this decade. So basically, 40 to 60 P is likely fair for 2025, puts the stock somewhere between about 137 and 206, right? So I don't think there's necessarily a ton of money to be made in the short term in e.l.f., unless they report another banger quarter at the beginning of this year, which, then we're going back to 200 likely in 2025. That's what I'll say about that. Now, 2026, 20% top line growth, 40% bottom line, 35 to 55 P's fair for a cosmetics company. This is almost like a SaaS company. I mean, these companies, somebody runs out of the product, they go buy more, right? It's cosmetics, it's beauty, like that. You don't just stop wearing makeup. You don't just stop doing skincare. Like, that's not how it works, right? So basically 35 to 55 P, I think, is pretty fair for this company, given those sorts of growth rates. Puts the stock 168 to 264 in 2026, 2027, 235 to 370 in 2028. That puts the stock somewhere between $329 and $518, which gives me a compound annual growth rate of 24% on the low end and about 39% on the high end. So whenever I can look out at a stock and I run what I believe is a realistic scenario for them, and I can get a CAGR on the low end of 20% plus, it's very attractive. Not only that, when I look at e.l.f., it's a company that's they've executed far better than I ever anticipated. Some of them, they get bonus points for that, right? Additionally, balance sheet's in a great place. They get bonus points for that. Additionally, they've got a top tier CEO. I mean, who's better than Terang in the last 5 years? They get bonus points for that. And additionally, their products are great, whether it's a high inflationary environment, deflationary environment, recession, it doesn't matter. e.l.f. sells because they got great products at very low price points, and they're needs based. So therefore, they get bonus points for that. So when I can run what I feel like is a conservative case, and I get a CAGR over 20% on the low end, dude, I can't not buy the stock. Like, as I could be up 10,000% on the stock, and it's still a buy. At the end of the day, all that matters is the numbers and the valuation. And when you run your projections over the next few years, if you believe it's a very attractive compound annual growth rate you're going to get, you got to take that opportunity. So I got to take that opportunity. If e.l.f.'s business model ever completely falls apart, the story changes, right? But we have no signs of that. The company just puts up great growth and great growth. I mean, look at this. This is our charts feature on 1000X. We got a bunch of different charts on there, and this is just looking at the revenue chart. This is on a trailing 12-month basis, right? Now, analysts might be bearish. They might be wrong on this. It might continue to go like that. That's probably what's going to happen, right? But this is truly a top-tier company. When you can see on a trailing 12-month basis, the revenue just boop, 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 just a stair step up, that's unbelievable. And this is a stock I featured on I have a series I've done on the channel this year, which is called Buy This Stock and Don't Stop. And the series has been on fire. Shopify, I believe, has 2x since I put out that video. Palantir today, since I put out that video, Palantir is now like $75 versus it was $20 when I did that video. Tesla was $180 when I did that video. Tesla today, I think, is $370 or somewhere around there. Nike stock, jury's still out on that one, right? It was 75 when I did the video. I think Nike's like 79 today. e.l.f. is one of the videos I did. If you never got to check out that and you want to watch that one, I think it's worth checking out, right? e.l.f. was 101 when I did that, and e.l.f.'s like, 130 something now. At this point in time, what is e.l.f? 139. So it's done pretty good. And jury's still out in regards to Celsius. But what a year it's been for that series. Oh my gosh. Hey, I want to thank you so much for watching that clip. I hope you really enjoyed it. What I'm showing you in front of your face right now is 1000xstocks.com. This is such an important website and service to use if you want to research companies, if you want to understand companies on a high level, so you can hopefully get better results in the market. And we know as the years tick on, money compounds. It is so important you research companies, you compare companies, you're listening to conference calls, looking at SEC filings. All that's included into 1000xstocks.com. So to enjoy 1000xstocks.com and to apply for that service, you can go to the description area of this video, or you can go to 1000xstocks.com, whichever you prefer. All right, let's hear this woman, Elizabeth Burton from Goldman Sachs, about next year.
And strategist at Goldman Sachs Asset Management, back with us at Post 9. It's good to see you.
This is a time of year when everybody's just debating on what's going to happen in 2025, right? This last few weeks of December, like everybody's just debating it, and then like the first week of January, second week of January, everybody's just debating like what's this year going to be like, and then all of a sudden you start having earnings come out toward the back half of January, and then everybody stops debating like what's going to happen for the next upcoming year, because then our focus goes to earnings, and then it's just busy after that.
Good to see you.
I'll just ask you on the broad market. Just because we just had this story about, a deal that is not going to happen. One of the expectations about the new year is that a lot of deals are going to happen. And that's part of the optimism, along with tax cuts and deregulation and everything else. I mean, you want to just give us a sort of broad thought on where you think 25 is going to look like?
Sure. So optimism is always great, and we've seen quite a bit of it over the last month. I think the last 4 weeks ending Friday was one of the biggest monthly flows on record, 140 billion into equities that we've seen. So there's clearly a lot of optimism going forward. We think, as you know, our outlook for 2025 at Goldman Sachs is still positive equity returns, but there's a lot of tail risks. There's a lot of places where there can be some stumbles, and we're so concentrated right now, listen, the equity market and so few names, it's not going to be shocking to say that we think you should be broadening out, thinking about diversifying your portfolio now.
I mean, it's interesting because that trade had obviously been working quite well until recently, it feels like. Then the money's been finding a home again in a lot of the mega cap names at the expense of broader parts of the market. Is this just a blip preparing for the end of the year, into the new year? What do you read on that?
I think there is something about going into the end of the year. The last 2 weeks of December, the first 2 weeks of January historically tend to be really good for stocks, and a lot of these flows are passive, right? Which means for every dollar you see going into the S&P, 37 cents of that is going into the mega cap names.
Yep.
But we are more constructive actually on the mid cap and small cap names looking into next year. We think there's a lot of room for growth there. There's a lot of quality in the mid cap names. We've said before that we think small cap remains interesting, and we think that story still remains true. And I hear a lot of people saying, it may not be as cheap as you think, but if you look at on a median PE ratio, small caps and Russell 2000 is what I'm talking about. Median, you take out the ones that aren't profitable, it's actually trading at a 23% discount, which on historical average is about a 2% discount.
Do you think there's skepticism in part because we've dialed back our expectations of rate cuts, and you need a bunch of rate cuts to make small caps work even better?
That could be part of the issue. I think it's hard just to miss out on FOMO, right? Because if you don't stay invested there, you might think you're getting it wrong. And look, staying invested in growth is part of our outlook, and we certainly like the Mag 7 in addition to the other names. But the Mag 7 we project are only going to outperform the remaining 493 by 7 percentage points next year. That's a pretty small margin to have so much confidence.
You say that next year is going to...
What are some of my favorite small cap stocks? So... Honest, HNST is still one of my favorite small cap stocks. That one is $7-something right now, right? I mean, what Carl has done there is just unbelievable in terms of turning that business around. So that remains one of my favorite small cap related companies, very small market cap on that one, right? Fubo, I mean, if they can just produce a couple quarters here where losses are very minimal, I think that one's primed to fly major, right? Outside of those two, like SoFi is not really technically a small cap stock. They just kind of get grouped into that because they're so small as a financial institution, and fintech, to be quite frank, compared to like most banks or fintechs, right? So they almost kind of get grouped in, even though they're not technically a small cap. But that one's still very bullish on SoFi, right? That's why I haven't cashed out any shares in the public count. Like I still got all 3,700 shares I have of that one. So that one definitely comes to mind. I'm trying to think if there's any other small caps that come to mind. Those are probably the main ones. Cheesecake, that one's kind of gets considered a small cap. It's around a $2-something billion market cap there. That one still has tremendous upside for many, many years in regards to that one. That's just a very special 5-10 year story, and so that's why that stock continues to see momentum. I continue to buy the stock. I'm going to probably continue to buy the stock for quite a while into the future, and I'm looking to hold that one for the next 5-10 years because they have multiple kind of growth levers in regards to that company. So yeah, those are just some of the ones that come to mind when I think about like small caps. I'm still very bullish on in regards to this market.
About growth assets and diversifiers. What does that mean? When you think diversifiers, what is our viewers supposed to think?
Sure. So I'm saying it's not equities versus bonds. It's growth, which some attribute to equity, but it's a lot of other things too, versus diversifying. So in terms of diversifiers, that could be things like infrastructure, which are, maybe have a 0.6 correlation to equities, but it could also be tail hedges, risk off strategies, and in this environment, gold and bonds. I think the bond story, while we're constructive on bonds, it's actually one of the biggest changes to our asset allocation is that we're now overweight bonds. It's really in its relative role as a diversifier to your portfolio, not necessarily, a total return story, because we think it's going to be carry driven next year.
So are you thinking a lot about alternatives as part of, and the sort of rebuilding of portfolios in a new political/economic environment?
I don't know if it's so much politically oriented, but rebuilding the alternatives portfolios based on, one, the tail risks you think are coming, and two, what's sort of happened in the private equity and venture markets over the last year. Investors aren't getting their money back. Venture has clearly had some issues, getting funding and returning capital to investors. Mm-hmm. We think growth equity, for that reason, should be pretty interesting next year. Those sort of check sizes are going to have to come from growth equities. And when you think about that opportunity, there's about 750 unicorns right now, and that's about a 10-year backlog. So those companies are going to need private capital for longer.
They're going to need private capital, which means that at least the IPO pipeline, which is fairly rich,
sure.
A lot of companies are just staying private longer, and they're using the capital that they can get from private equity to stay private longer. Sure. Is that likely to change, or no?
Once there's more certainty in the market, we hope that will change. But, we've been saying that for a couple of years now, so we need to see additional certainty. And I think one of the things about 2025, there's a lot of different ways things can go, but we should see a pickup in the IPO market for sure.
I think people are looking internationally, too, and trying to figure out what possible tariffs are going to mean on
Goldman
different
Sachs
parts of the country. I've had a lot of people who've loved India over the last 2 years. And now, maybe they still do, and maybe they like it even more.
You know why the IPO market's not? Yeah, bullish. I'm bullish India long term. Very bullish on India long term. That does not mean I want to buy India's stock market index. No. But I am very bullish on India as a country. For the next, I say, 10, 20 years. Very bullish. Like, most bullish I've been on a country since when I first got in the stock market. I was very bullish on China. No, there was interesting thought there at the end of the video she was bringing up, right? Or they were talking about before they talked about India. Oh, IPOs. So, Goldman Sachs would love more IPOs. But why aren't we seeing a lot of IPOs? Because you look at the financial markets, it's doing well, but where are all the IPOs at? I think there's two reasons you're not seeing a lot of IPOs. First reason is I don't think there's a lot of compelling IPOs out there. Like, usually in the private markets, there's a bunch of very compelling companies that investors like, oh, I can't wait to buy this one. I can't wait to get my hands on this stock. There's hardly anything. Like, only one that comes to mind that I could see investors going crazy for if it went public is what company? SpaceX. That's the only one that I could see like investors being like, oh, I got to buy this. I got to get in this. SpaceX, baby. I'm going to own SpaceX stocks. That's the only one. There's not another company I can think of off the top of my head that I'm like, people would love to buy that. Even OpenAI, because they have Microsoft owns such a huge portion of the company now, I don't even know if people would go that mad about OpenAI. Like, SpaceX is the only slam dunk that I know of right now that I can think of. Like, I'm like, no question. Like, everybody's going to go Google over that. Everybody's going to want to buy at least one share of SpaceX just so you can be a SpaceX shareholder, right? Regardless of what the business model will look like for SpaceX, it would just be an exciting, big deal, right? So I think that holds it back. Additionally, usually you see a lot of IPOs when small caps are running, right? when the Russell's doing great and you get an overall major bull market, which we haven't had an overall major bull market really over the past few years. Look at the Russell on a 3-year basis. Look where it's at. Like, sleep. It's been asleep, right? So it's basically at the same level it was 3 years ago, if not lower than it was 3 years ago. That's not really a great bull feeling. You need to see a Russell do a huge blow off top, like move to all-time highs and then all-time highs on all-time highs, right? To really get people feeling great about like IPOs and like people willing to take risk and the risk assets. If all you have is just people willing to hide out money in Apple and Google and Meta and Amazon and those sorts of stocks, it doesn't give enough confidence. It doesn't give enough confidence for companies to say, you know, there's a huge appetite for buying anything. Let's go IPO now at this point in time, right? So that's kind of my thought in regards to that.